The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Tuesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. We kick things off with markets right near flat territory. We were lower in the pre-market. We've risen a bit since about 7:45 this morning, and you get the S&Ps up by 5 points, or 0.1% at 63.49. NASDAQ 100 barely in the green by 1 point right now, 23,343. Dow slightly in the red by 17 points, 44,529. The Russell positive by 2 points at 2244. Bitcoin's making another run. We're up near 120,000, 119,625. Bitcoin up $2,800. You take a look at the daily. All right, just pushing those all-time highs. You got a tail up to 123. That's 8 days ago on July 14th, but we're pushing higher price yet again in Bitcoin. Ethereum, we're flat this morning at 37.06. Ethereum's been on a run recently. We got crude trading lower. How about those cheap gas prices? You got to love that. We got crude trading down 67 pennies at 65.28. Gold continuing to run, and that is on some dollar weakness persisting. Gold up by $17. We jump over to yields right now. We got the 10-year. I was doing the newsletter this morning. We're at about 4.39. We're pushing right now about 4.37. Okay, lower yield persisting. And yeah, you got dollar weakness persisting as well. We're under 98. We've been under 98 since basically 24 hours ago. And we're trading right now at 97.84. So with that dollar weakness, yeah, that's what's giving gold a little bit of a bid. Gold was up almost $50 yesterday. We're up another $17 at 34.24 in the price of gold. You jump over to silver right now. And silver catching a bid as well, up by 1%. And yeah, that's breaking recent highs on silver. We're pushing $40 on silver right now at $39.68. Jump around to some of those silver stocks. First Majestic right now. Yeah, a little bit of a pop yesterday. Pan American, a little bit of a pop, trying to get back in that channel as well. All right, we take a look at yields. So the 10-year right now positive by 1 tick. Now you jump over. It's every single day, which is remarkable, that you are getting headlines right now that all have to do with the Fed for obvious reasons. But this one, Treasury Secretary offered support for Powell. Now, the reports were out there that he was trying to talk Trump down off of firing him. There's nothing that tells me that he should step down right now. Strong words, man. His term ends in May. If he wants to see that through, I think he should. If he wants to leave early, I think he should. Well, the pressure is on for him to leave early, that's for sure. Yeah. Nonetheless, rates in focus, man, and it continues. We jump over to General Motors. So GM's a little bit lower this morning, out with their numbers. Profits fall. How about $1.1 billion in tariffs? That's coming from somewhere, folks. Somebody's paying that. It's either the company or the consumers, right? $253 a share. Market was looking for $233. Higher warranty costs and a buildup of inventory in there as well. They have not moved to raise high sticker prices. Now, car prices are one of the things that have come down, actually, in some of the CPI numbers recently. Yeah, and they're trying to say they're adapting, they're lowering that tariff exposure. Yeah, net income declining 35%. $1.9 billion versus $2.9 billion. I mean, that's $1 billion in 90 days. It can offset 1/3 of its $4 to $5 billion in tariff exposure later this year as more of its mitigation efforts. $4 to $5 billion in tariff exposure. Ooh. Their earnings are going to be 10 to 12.5 billion. They slashed the outlook in May, and initially in January they were at 15.7, but the market already knew that wasn't happening with the new tariff structure. Jump over to GM shares this morning. And yeah, there's your dip lower to 50.57. We're trading right now down by about $1 to 52.29 for GM. We jump around to some of the Magnificent Seven. Apple, quite a spike on the open yesterday. We're going to open by about 50 pennies this morning to 213. Amazon, catching another bid. We're up to 230 in the pre-market. We were at 229 yesterday. You were at 223 on the lows of Friday. You were at 226. Look how it chopped around on Friday, pushing 226, right? You accelerate higher yesterday. You take a look at Amazon on a daily. We got highs out here of 242. We're pushing 230 this morning. Those are the highs of last year. Jump over to Tesla. So Tesla's out with their numbers tomorrow. You trade lower yesterday. We're higher in the pre-market by about $1. You also get Google that was on quite a tear yesterday, and it's not stopping, man. Investors getting into Google ahead of their numbers tomorrow. And yeah, you're going to open another $1 to the upside on Google. We've been talking about Google in focus. On a daily basis, yeah, you had some nice volume yesterday. You did about 24.6 million shares. And yeah, that would be the highest volume day going back in the last couple weeks or so. So Google going to be up by another $1 in the pre-market. You jump over to the big dog. I used to call Apple the big dog. Nvidia's the big dog now, man. Nvidia shares. All right, we're going to be slightly lower actually in the pre-market. What's going on here? Nvidia's given up $3 from the highs of Friday. This market just drifts higher. Nvidia's not participating just yet, but you got the likes of Meta with the trade higher as well. Yeah, look at this, right? So look at how you are getting a little bit of divergence rotation, right? Nvidia was the power horse. Meanwhile, since Friday, you've had Meta shares go from $690 or even $700 to $715. I just showed you you've had Google shares from last Friday go from $184 to $192. Yeah, Apple on Friday was about $209 or $213, so we've had a drift up. But Nvidia, what are you pushing right now? Almost at 4.2 trillion, I believe. Yeah, $4.17 trillion right now at $171 for Nvidia shares. All right, we jump over to Netflix. Netflix had their numbers last week. Some big numbers. Yeah, we'll keep our eye on Warner Brothers Discovery. Taking a look at this in the afternoon show yesterday. Now, you take a look at this Warner Brothers Discovery stock, man. That was a decisive break last week on volume. Look how you break above the highs of 2024. You do it with volume. You close above that price level. And we do 504 million shares last week. Quite a number, man. Warner Brothers Discovery flat this morning at about 1280. All right, we got the S&Ps up by 4 right now. Yeah, we're trading at 63.48. We got the NASDAQ 100 flat, Dow negative by 33 points. And we got dollar weakness right now with the dollar at 97.86 and that gold contract up by $16. All right, folks, stay tuned. We're coming back. We'll take a look at some other equities. We'll talk some earnings. Don't go away. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets. with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Can you hear me out? Testing 1, 2. Maybe you can let me know in the den. Pretty sure I'm okay right now. Okay. Come on, pal. Whew. Tesla shares right now. Okay. Tesla US sales dip, GM EVs close the gap. Okay. And you go into this, whether you talk about China, whether you talk about the US, it's remarkable the feat that they're dealing with in terms of Tesla right now. You have Tesla, you have Americans bought 310,000 EVs. That's a 6.3% drop from a year earlier period, okay? The sales dip was nearly equal to the slump in transactions for Tesla, right? Which is like they're the ones that have the decreases, one way to look at it. It's not how it works, but that is how dramatic their drop-off has been. EV sales dipped slightly in the second quarter as buyers abandoned Tesla and flocked to new models of GM, Porsche, and Volvo. That's the amount of vehicles sold, but Tesla with dramatic decreases. They talk about GM has 12 fully electric vehicles in the U.S., 15% of the U.S. EV market, triple of what Ford is. GM selling one electric vehicle for every 3 Teslas. You can imagine that, right? You look at the multiples that Tesla trades at, etc., and they're only trading 3 times the electric vehicles, right? Tesla controlled 80% of the market 4 years ago. And meanwhile now, GM selling 1 vehicle for every 3 Teslas. And that's just GM. That's not the other Ford, etc. Honda is in there, but GM remains in the sweet spot. The Chevy Equinox, 33.6. That's a sweet spot, okay? And that's without federal or state incentives. This was like the holy grail that Elon was talking about. Never came to be, right? And yeah, the average car right now sells for about $50,000. April through June, about 17,000 of those cars sold. It's all about affordability. That's like period, end of sentence, man. You know, I always talk about the Kia Telluride. I love those things for dollar, the value on a 3-row SUV. Okay, now it's a Kia versus a Chevy or whatever your preferred brand is. But a Kia at that value for $50,000 versus something like a Yukon Denali, which is amazing, okay? But it's amazing at $100,000 or $110,000. So there's your problem. You're talking about affordability. You're talking about value. And yeah, September 30th, it's going to be interesting to see how these values. Who's going to buy? This is what you want to look at, okay? Who's going to buy an electric vehicle October 1st? Can you imagine being in the dealership and trying to pitch somebody on an electric vehicle the day after the $7,500 incentive goes bust? Yeah, we're going to definitely try and see a lot of manufacturers create a sense of urgency. Good luck to the salespeople on October 1st, where you got a $7,500. All right. Coca-Cola. U.S. cane sugar soda is coming, and it's coming soon, man. Yeah. So they've said it after Trump said it a week ago. Coca-Cola, they posted their second quarter growth. Take a look at Coke. Going to be trading slightly in the red this morning. Yeah, you were higher, you trade lower. They got the conference call going on. You're only negative by about 50 pennies right now, but they're out with their numbers this morning. They expect full-year comp earnings per share growth 3%, up from 2 to 3. So they're going to be making more money. High fructose corn syrup. What's going to happen to the cornfields, I wonder? Right? They're going to be fine, I guess. But it's going to be a lot of, yeah. So U.S. cane sugar production is going to be 30% of the nation's sugar supply. The remainder comes from sugar beets, as well as imports from Mexico and other countries. And you know what's great, folks? Sugar is great. What I find myself looking at all the time, and I became hyper aware of it once you have kids, should be hyper aware of it with yourself. Without it, but kids, they make you hyper aware more so even above yourself, right? Is the added sugar. That's what it's all about. It's not about the sugar. You know, there's tons of sugar in bananas. There's tons of sugar in grapes. There's tons of sugar in strawberries. It's natural sugar. It comes with fiber. It doesn't cause sugar spikes in your body. So, you know, still adding cane sugar. Yeah, it's not high fructose corn syrup, but Coca-Cola with cane sugar, probably not the healthiest thing for you still. Just adding sugar to your water, right? You like that water? Add some sugar to that water. Hey, listen. Everything in moderation, but in the context of what we're talking about there, that is the difference there, okay? And yes, it's probably preferred, but in general, adding sugar, that's a problem, no matter what. And I do it all the time. But this like radical that cane sugar is going to replace high fructose corn syrup and everything's going to be fine. I think I made my point, right? All right, we get the S&Ps up by 3 right now. All right. We talked about EVs. We talked about Coke. What else we got going on? All right, let's look at some of the movers this morning. So, jump over and do a little defense. So, Lockheed Martin, okay. They're out with their numbers. Quarterly revenue, they miss. They come in with $18.16 billion. So this is Lockheed Martin. We take a look at a bigger picture of this. We've had some volatility recently with some of the wars going on. And the defense stocks with some volatility. You put it back on a daily. Yeah, look at that ramp up. And things are potentially escalating from 443 to 490. You got to be so careful chasing stocks, right, folks? Look where we are. Today we're going to be at 425. For everybody chasing the defense stocks, man, I hope you were quick enough to get in and out. Oof. So they got a $1.6 billion loss attributable to some defense programs. Ongoing program review process identified new developments that cause us to reevaluate the financial position on a set of major legacy programs. A little bit of a reset there. We'll talk some Lockheed Martin when we come back.
Sharpening
Opening bell.
your
Don't go away.
skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the markets open. You got an S&P that is flat right now. NASDAQ 100 slightly in the red. We take a look at Coke. So Coke, with their numbers off by 1.4% today. And to finish up on that story, so they are going to come out with the cane sugar version, but it's going to be an and, as in they're going to have both. They're going to keep the high fructose corn syrup version, and they're going to, what are they going to do? They're going to create a premium version with real sugar, right? So we're going to have fake sugar Coke, and we're going to have real sugar Coke. All they're going to do is create a premium version. We're going to continue to use a lot of the corn syrup that we do now. Where's the president? Where's RFK? What's going on? What happened to Make America Healthy again? So now they're going to have the real stuff, but it's going to be more expensive. Hey, nonetheless, they got an issue anyway with their numbers. Revenue ticked up 1% to $12.5 billion. The market was looking for 12.57. They do expect earnings per share, though, 3% for the full year, and they were only looking for 2 to 3%. But hey, the market's selling off this morning. You're off by 1.5% right now. Jump over to GM on their numbers, off by 3.7% for GM right now. And yeah, you take a look at Lockheed Martin on their open, down by 7.8%. Let's take a look at this thing longer term. All right, we're coming right back into the lows of the year. The lows were 418.88. We just hit 419.10. Woo. 22 cents away from the lows. And this is where, folks, you know, just from a pure technical standpoint, okay? I love trades like this when you just give it nothing. If you're ever looking for this, and I'm not telling you to buy it right now, okay, folks, but you got down to a low of 419.70 in February, you got down to a low of 418.88 in the April lows, and you just got within 22 cents of that low. Just get in that position and keep your stop as tight as you can, okay? Even if you're going to get stopped out, and we might get stopped out by the time on this theoretical trade that I finish talking through this sentence, but you just don't give it a lot of room at all, right? You trade below that area, 418.88, you set your stop at 418.63. Give yourself 25 cents below that low. Okay? And you can take a look at that one when you go forward. But technical areas of support, of resistance, 418.88, that's the low of April 7th. Because you get below there. And we have some action at 400 potentially. They got some issues, man. And government contracts, you know, defense is going to be a sweet spot. But in general, they have a lot of volatility coming down the line, and they miss their numbers by dramatic fashion. You're down 8.2% on this equity. And look at the selling, right? The red bars. Look at the pronounced selling. Selling ramps up on the way down. Folks, this is called quality volume on the way down. Let's put it back to a weekly. All right. Accelerate lower, accelerate lower. We did get a nice bid the week of June 9th. But you're going to do some big volume today on earnings day, man. You've already done 2.3 million shares for 3 minutes into the trading day. Yeah, look at that monthly basis, right? Ramping up, ramping up. You get a slight reprieve on lighter volume. And then in June, you trade lower with 35.4 million. Yeah, you take it out. We're going to do it again this month, I imagine. Well, we'll see. We've only done 20 million. Today's going to be a big day. But Lockheed Martin, we're pushing lows right now. And we're breaking them with some volume. GM, look at that selling in April. All right, we take a look at some other equities with their numbers. So NXP Semiconductor, not sure what they're saying on the conference call, but the market's liking it, that's for sure. Look at this, surge higher. We surge higher on the open. You are green after trading down $15 last night on their numbers. Whew. So second quarter sales declined due to slow demand in the automotive market. They beat on the top and bottom line, but you actually had a little bit of a slowdown with second quarter sales declining due to that slow demand. Taking a look at this thing on a monthly even. So we got highs of 2021 up there. No volume up there, though. Put this back on a weekly. Yeah, we're coming into the highs of late 2021, right where we are, but there's nothing crazy in terms of volume back at that price level. Take a look at this shorter term, looking at NXP. You get that February volume of almost 19.3 million shares on a weekly, but this is going to be an important week because we got earnings week. We've already done. It's Tuesday. We've already done 6.8 million shares. The market just opened. It's going to be a big weekly volume bar. Let's take a look at some of the tech stocks. Amazon shares slightly in the green this morning. You jump over to Apple, slightly in the green as well. Meta shares off 0.1% right now. Google up by 0.1%. They were a little higher, right? They give it up. Yeah, they gave it up on the open. We're up to 192.93. Google's still in the green up. We turn red as I speak. And Tesla with their numbers tomorrow, down by 0.5%. We check in on Warner Brothers. Yeah, up by 0.5%. Netflix slightly in the red this morning. Some of the high flyers even yesterday. Oracle down by 1.3%. Let's jump over to some of the mining equities. Talk a little uranium. This thing's been on quite a tear, man. You know, I love this equity longer term, folks, and this is not how A to B, C to Ds work, okay? But you can see the harmonic nature of this equity. Highs and lows and highs and lows. There's a possibility when you get a run like this, okay? This move that we're in Kamiko, from the April low, it's a 1 to 1.618 expansion of the run that you had last year in September. So you accelerate higher last year, you pull back, and then you do a 1.618 expansion of that same move. And that's right where we peaked out. You're talking about almost to the penny, right? Maybe 79.40, you hit 80.50, okay? But volume, the week of June 9th, 44 million shares. Last 2 weeks, doing 26 million shares. Uranium, nuclear, it is in focus, folks. But you're talking about an equity that just went from $35 to $77. Yeah, we take a look at silver. Now, here's another one to put on your radar, okay? First Majestic. AG. We're keeping our eye on this one in the gold report. We had quite a pullback on lighter volume last week. That's a weekly. You pull back with wide price spread. You do it on lighter volume, though. Only 88 million shares. The prior week, when you accelerated higher, 141 million shares. We put this back on a daily. Okay. You see the acceleration on July 11th. We pull back on lighter volume. The bid yesterday was on lighter volume as well, though. But longer term, you go back 5 years on this thing. Okay. Look at this $8 area. It was the highs of April last year. It was the highs of October last year. It's where you struggled to get above when you accelerated in June. It was the highs of 2023 in April of that year. And it was the area that you first ripped lower in 2022, and we're above that area. You break above it, you test it on lighter volume, waiting for a confirmed breakout. First Majestic, silver trading higher. Come right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. S&P's positive by 1, NASDAQ 100, only index currently in the red by about 70 points, but you see a little bit of volatility in the opening bell. We sell, we accelerate higher, you put it on 1 minute. You can just see right out of the gate, right? We get selling in the first minute. Since then, we're climbing higher. We test that area, and right now the S&P's up by 1. NASDAQ 100, no reprieve, selling and some more selling coming in. On that minute basis, we take a look at back on a 15-minute, and that's just the opening bell. NASDAQ 100 back to where we were at about 5:30 a.m. this morning. And oof, GM, okay, watch out. Down by 6.3%, man. The market's saying, no, we don't like those numbers right now. You jump over to Ford, down by 1.3% right now. Stellantis right now, down by 0.6%. You jump over to Tesla, slightly in the green as they await their numbers tomorrow. Google with their numbers tomorrow, giving back some of yesterday's gain. Off by 0.3% right now. All right, we take a look at some other equities, talking about yields, talking about real estate. You have D.R. Horton now with their numbers. DHI is their symbol. How about that one? All right. Might be buying some D.R. Horton, man. As if I'm not deep enough in real estate yet, right? So D.R. Horton, they come in at $336 a share. Market was looking for $289. Revenue of $9.23 billion, topping the estimate of $8.75 billion. Let's take a look at a weekly on this thing. So look what we do. We accelerate higher from 2022 to 2024. You pull back and touch the 618 exactly in April. And then on a volume basis, that was your breakout, man. July 7th, 23.3 million shares. You do trade lower last week on slightly lower volume, and you're going to get a breakout volume today. Hey, you know, they did it last quarter in terms of the numbers, but this is lining up. It was quite a consolidation, quite a floor. They've gotten pummeled when it comes to tariffs, when it comes to yields. And what are we getting now? Well, what we're getting now is we're getting a reprieve on yields potentially in the coming 10 months. And when you get lower yields, you're going to get a weaker dollar, and we're seeing that happening today. Put the dollar back on a daily. We're breaking lower again, 97.751. So yeah, D.R. Horton's up by 11% today. Jump over to Lennar on the tailwinds of that, up 6.5% right now. Pulte up by 7.5%. Woof. Yeah, Pulte comes in with their numbers as well. $303 a share versus $296, and they slightly beat on revenue. But this is an industry story, man. You know, they're looking at D.R. Horton saying, man, we are running right now, because Pulte barely beat. As we're getting the 10-year at 4.37%. and Chairman Powell is in focus, but boy, I'm going to be looking closely at this one, folks. That was quite a pullback. You come back. What do we have highs out here at? 110.45. Oh my goodness, look at that, folks. So when you're saying to yourself on the pullback, like I have been telling you, right? Sometimes it's as easy as picking a technical area, okay, and saying to yourself, if I'm wrong, I'm wrong. And I didn't make this trade. Okay, it's hindsight. It's a theoretical. I get it. But if you were looking and you want to get in this equity, you say to yourself, on that April low, say, man, really, where am I looking? Where am I looking? Where's a good buy in this equity? And maybe you say to yourself, all right, late 2021, 110.45. Okay. I'm going to look for a touch of that area, and maybe you give yourself a stop somewhere below this area of like 106.89. You trade it to 110.44. My goodness, on that April 7th low. And just like that, we're $35 higher at 145. Yeah, this is a break, man. We're in everything. As in, you're now above the lows of 2024. I'm looking for anywhere with some high volume that could stop this equity on the way up right now. It would be this bar from July of 2015 that sticks out. Now, we get some big bars on the way down, but potentially when you get into this 160 to 180 area, you're going to be dealing with the acceleration from October earnings of last year, and it's simultaneously the earnings from July last year. Tremendous volume in that area. But hey, 160 is the next stop, man. All right, keep your eye on those home builders, folks. Look at this. So Albertsons, the shop and grocery business. Come on, keep up. They're out with their number. Excuse me, they got upgraded. No, they're not cooperating. Come on. Yeah, they were out with their numbers recently. That was a tough earnings go around last week. I'd be careful of that one, man. All right, let's take a look at the market leaders out here. You got Apple shares slightly in the green. We got the NASDAQ 100 off 111 points right now. S&P slightly in the red. Amazon gives back its gains. Google as well. Look at that selling. Oof. Jump over to NVIDIA shares. Oh, boy. Okay. That's your weekly. Let's take a look at the daily. I mean, folks, it's been a one-way trip from $86 to $174. We got some selling going on in these tech stocks today. You better believe it. It's not often you can say in the last 19 minutes, this equity in NVIDIA just lost $125 billion in market cap. Ooh, $125 billion in market cap, just like that, gone. Now, why are they selling? Okay, it's going down because they're selling. Why are they selling? Got Google selling. Tesla slightly. Oh, it's all the leaders, man. Chip stocks, the leaders. Look at these, no matter what you pick. Oracle down 2.4% right now. Yeah, I haven't pulled these up ahead of time. I can pick any equity that's been leading this market right now, and they're down 2 to 3%. Dell off 2.3%. Ooh, Salesforce in the positive. There you go. Google off a full percentage point after the run higher it had yesterday. AMD picking up steam, down by 3.3% right now. Intel slightly in the red. All right, we're only 20 minutes in the trading day. We're going to have some action. Now remember, this is the day to get positioned. We got Google earnings tomorrow, okay? You got Tesla earnings tomorrow, among many others this week. But that kicks off tech earnings with more to follow in the weeks to come. We got a little bit of selling to kick off market action. NASDAQ 100. We're below the lows of yesterday right now. You're off by 0.6%. S&P's off by 8. Dow in the green. One more segment. Don't go away, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. And just like that, we get the NASDAQ 100 down 1%. We got some selling in this market, folks. Stay tuned. We got our man Basil Chapman. He's coming up next. And yeah, you better watch out. S&P's down 0.4%. And what's going on, Darth? What's going on with Kohl's? Look at this action. So Kohl's, what's the news on Kohl's? Somebody going after them? It's got to be, right? Kohl's said was halted. Let's see. Is it a meme rally? Don't tell me. I made a mention on stock media. Oh boy, watch out for this one. Social media mentions. Well, I got to know what kind of social media mentions get you to open up 100% and then give it back almost instantly. Social media mentions. My goodness, we live in interesting times, folks. Be careful out there. The meme stocks are alive and well. Hey, I told you yesterday on the program, right? Retail trading, it's coming. Imagine when people are going to be able to trade these equities daily like that on $2,000 versus $25,000. And it's how it should be, folks. Okay? We have commission-free trading. People should be able to access that. Boy, I don't know what to tell you when you're trading an equity like this. This is walking into the casino. So be careful in there. But Coles, that's gonna cause some wrenches in the charts. I mean, what's crazy is look at this chart and look how the bounce doesn't even show up on a monthly because this thing's gotten decimated from 80 down to 20 to 10. You bounce to 20 and we give it up. We're at a 12 handle just like that. All right, the meme stocks, they're coming back. Okay, folks, thanks so much for tuning in. Stay tuned. We got a market today, baby. We jump over. We'll finish it up with the VIX. VIX was slightly elevated this morning. Okay, even with the markets in positive territory, check out that VIX overnight, hitting 17 actually. Today, 1727. We get the NASDAQ 100 off by 190. And how about NVIDIA? Off by 3.3%. Stay tuned, folks. Basil Chapman's coming up next. Have a great day. We'll see you later, folks, for the Tom O'Brien Show.